Over time, investors have wondered whether or not the US dollar will collapse. This has been more of a question as the global economic landscape has changed since the early 2000s, primarily with China becoming an economic powerhouse over the last 2 decades, and some nations considering trading oil without the petrodollar. So in this video, we are going to discuss, will the US dollar collapse as a reserve currency? The video is going to be amazing. Make sure to stick till the end. Now before we get into this video, make sure to hit that subscribe button and leave a comment below saying I subscribed. I will try my best to reply to as many comments as possible. The US dollar is unlikely to collapse because it is the world's reserve currency. This means that it is used by governments and businesses around the world to store value and make payments. The US dollar is also backed by the strength of the US economy, which is the largest in the world. While a currency crisis in the United States is unlikely, there are a few reasons why it could happen. One reason is if the government prints too much money, leading to inflation. This would cause the value of the dollar to decrease, making it less attractive to hold or use as a store of value or medium of exchange. Another reason is if the government defaults on its debts. This would cause investors to lose confidence in the US economy, and they may start to sell their dollars, further driving down its value. Finally, a loss of confidence in the country's economy or political stability could also lead to a currency crisis. If people believe that the US economy is going to collapse, they may start to sell their dollars and invest in other currencies or assets. However, it is important to note that there are a number of factors that would need to happen in order for a currency crisis to occur in the United States. The US government has a long history of fiscal responsibility, and the US economy is still the largest in the world. Additionally, the US dollar is the world's reserve currency, which means that it is used by many countries around the world as a store of value and medium of exchange. This gives the US dollar a lot of stability and makes it less likely to collapse. Overall, while a currency crisis in the United States is not impossible, it is unlikely to happen in the near future. The US government and economy are both strong, and the US dollar is the world's reserve currency. However, if there are significant changes to either the government, economy, or global financial system, a currency crisis could become more likely. For example, if the US economy were to experience a severe recession or financial crisis, it could lead to a loss of confidence in the dollar and a decline in its value. Overall, the US dollar is a strong and stable currency, but there are some risks to its status as the world's reserve currency. Why currencies collapse? History is full of sudden currency collapses. Argentina, Hungary, Chile, Angola, Zimbabwe, and Germany have all experienced terrible currency crises since 1900. Depending on the definition of collapse, the Russian currency calamity in 2014 could be considered another example. The root of any collapse stems from a lack of faith in the stability or usefulness of money to serve as an effective store of value or medium of exchange. As soon as users stop believing that a currency is useful, that currency is in trouble. This can be brought about through improper valuations, pegging, chronic low growth, or inflation. Strengths of the US dollar. Ever since the Bretton Woods Agreement in 1944, other major governments and central banks have relied on the US dollar to back up the value of their own currencies. Through its reserve currency status, the dollar receives extra legitimacy in the eyes of domestic users, currency traders, and participants in international transactions. Most global oil transactions are conducted in petrodollars, meaning sales and revenues of oil transactions are denominated in US dollars. The US dollar is not the only reserve currency in the world, though it is the most prevalent. The International Monetary Fund, IMF, has approved 4 other reserve currencies: the euro, the British pound sterling, the Japanese yen, and the Chinese yuan. It is important that the dollar has competitors as an international reserve currency because it creates a theoretical alternative for the rest of the world in case American policymakers lead the dollar down a damaging path. Finally, the American economy is still the largest and most important economy in the world. Even though growth has slowed significantly since 2001, the American economy still regularly outperforms its peers in Europe and Japan. The dollar is backed up by the productivity of American workers, or at least so long as American workers continue to use the dollar almost exclusively. Weaknesses of the US dollar. The fundamental weakness of the US dollar is that it is only valuable through government fiat. This weakness is shared by every other major national currency in the world and is perceived as normal in the modern age. However, as recently as the 1970s, it was considered a somewhat radical proposition. Without the discipline imposed by a commodity-based currency standard, such as gold, the worry is that governments might print too much money for political purposes or to conduct wars. In fact, one reason the IMF was formed was to monitor the Federal Reserve and its commitment to Bretton Woods. Today, the IMF uses the other reserves as a discipline on Fed activity. If foreign governments or investors decided to switch away from the US dollar en masse, the flood of short positions could significantly hurt anyone with assets denominated in dollars. If the Federal Reserve creates money and the US government assumes and monetizes debt faster than the US economy grows, the future value of the currency could fall in absolute terms. Fortunately for the United States, virtually every alternative currency is backed by similar economic policies. Even if the dollar faltered in absolute terms, it may still be stronger globally due to its strength relative to the alternatives. Will the US dollar collapse? There are some conceivable scenarios that might cause a sudden crisis for the dollar. The most realistic is the dual threat of high inflation and high debt, a scenario in which rising consumer prices force the Fed to sharply raise interest rates. Much of the national debt is made up of relatively short-term instruments, so a spike in rates would act like an adjustable rate mortgage after the teaser period ends. If the US government struggled to afford its interest payments, foreign creditors could dump the dollar and trigger a collapse. If the US entered a steep recession or depression without dragging the rest of the world with it, users might leave the dollar. Another option would involve some major power, such as China or a post-European Union Germany, reinstating a commodity-based standard and monopolizing the reserve currency space. However, even in these scenarios, it is not clear that the dollar necessarily would collapse. The collapse of the dollar remains highly unlikely. Of the preconditions necessary to force a collapse, only the prospect of higher inflation appears reasonable. Foreign exporters such as China and Japan do not want a dollar collapse because the United States is too important a customer. And even if the United States had to renegotiate or default on some debt obligations, there is little evidence that the world would let the dollar collapse and risk possible contagion. What would happen if the US dollar collapses? If the US dollar collapses, the cost of imports will become more expensive. The government will not be able to borrow at current rates, resulting in a deficit that will need to be filled by increasing taxes or printing money. Inflation will skyrocket due to the higher cost of imports and the printing of money, resulting in an overall collapse of the economy. What to do before the dollar collapses? Although the US dollar collapsing is unlikely, there are ways to hedge against it. These include purchasing the currencies of other nations, investing in mutual funds and ETFs based in other countries, and purchasing the shares of domestic stocks that have large international operations. Purchasing the currencies of other nations can help to protect your assets from the effects of inflation and currency fluctuations. Investing in mutual funds and ETFs based in other countries can give you exposure to different economies and asset classes. And purchasing the shares of domestic stocks that have large international operations can help you to benefit from the growth of these companies in other countries. It is important to note that hedging against the collapse of the US dollar is not a guarantee of success. The value of any currency or investment can go up or down, and there is always the risk of losing money. However, hedging can help to reduce your risk and protect your assets from the negative effects of a declining dollar. Let us know your opinion in the comments section below. This was all for today. Hope you liked the video. Subscribe to our channel and stay tuned for more interesting videos. Stay safe, and we will be back soon with another video.